Saving your money is wasting your money, and today I'm going to share with you why you should be investing your money into other areas instead of putting it straight into your bank account. How's it going, guys? Ryan here with another investing video, and today we're taking a bit of a different tact and we're actually talking about why saving your money is a very bad investment. But before we get into that, guys, please remember to like this video. It helps me out so much, especially with the YouTube algorithm, and subscribe to keep up to date with all the latest and greatest content on this channel. And remember to leave below a comment, and in particular today I'd like to know, what is your favorite type of investment? So without further ado, guys, let's get straight into the video. And to kick this off, I want to make a point of saying, if you're able to save money, good on you. But saving money and putting your money straight into a bank account is not the best decision financially. You may have heard the saying that make your money work for you, and effectively what you can do is make your money work while you're asleep or while you're just not doing anything at all. Obviously there's bits of work involved, but having your money sitting in a bank account isn't the right way to go about it. So as an example, if you are investing your money instead of saving it, on average between 1900 and 2017, the average return on the stock market was 13.21%. Keep that figure in mind. Now, that's on a per yearly basis. If we're instead talking about putting your money into a bank account and letting it sit there, the current rates you're getting will be only 1 to 2% return on your money. Right there immediately is a huge disparity. If you simply invested in something like the Dow Jones and let your money sit there, on average each year you'd be making over 13%, as opposed to have it sitting in a bank account and you're only making 1, maybe 2% if you're lucky per year. And we're talking on a long-term basis, obviously, but if you go and look at a chart with the Dow Jones on it, you'll see it's in a consistent long-term uptrend from 1900. Now, the stock market is, of course, a very beneficial area to invest in. I'll talk about in lots of videos. 13.21% is purely the average if you're investing in something like the Dow. The returns you can make on other stocks can be absolutely phenomenal. If you want to take a low risk approach, you can invest in dividend paying shares. And on average alone, they pay already roughly 4% per annum in dividends. That's immediately already higher than the rate at which you're getting from your savings account, for instance. Plus, that share, in theory, should hopefully increase in value as well. So not only are you gaining 4% per year from dividends, the share is also appreciating in value simultaneously. And that's on the safer side of investing in the stock market. On the riskier side, I always like to talk about micro caps and growth stocks and those sorts of things. That's where I tend to invest my own money, and the returns there can be absolutely phenomenal. You are literally talking 50%, 100%, 200%, 300%, or even more in under a year. It's absolutely phenomenal. And instead, if your money's just sitting away in a bank account, it's not doing anything for you and it's not going to help you out in the long run. If you want true wealth and you want to build true wealth, you need to put your money out there and you need to make it work for you. Now, the stock market isn't the only way to do that. You can look at other areas as well. One of the most common areas that people invest their money is in real estate. So typically what occurs is you'll buy an investment property, and this requires a large outlay of capital. So typically something in Australia on average is probably, in WA for instance, roughly $400,000. That's a large amount, and to the Americans out there, you're probably rubbing your head thinking, oh my god, that's the average? That's insane. Yeah, that's the sort of money you have to pay for a house in Australia, and that's on the average to probably lower end of houses that you can purchase. But from there, what you are doing is effectively trying to get that property rented out or leased out or something like that, and you're turning over an income every single week from the rent that you are taking. So you could be talking 350, 400, 500. It goes up depending on how the property market's going and the type of property that you have invested in the first place. If you can make money from the stock market and buy a house outright, for instance, then effectively what you're doing is putting your money into real estate, buying a house in cash or the majority of it, so that your loan is relatively low and you're making passive income. You're allowing your money to work for you and build yourself wealth over time, and you keep reinvesting that money. That's the whole theory behind this. Doesn't matter if you're talking stocks or real estate or any other ventures, you're not taking that money out for yourself. You're making your money work for you and keep building it on top of each other. You want that snowball effect to start occurring. Another key area people should be investing their money in is businesses, and we can talk anything from your typical sort of businesses, your companies, if you've got that knowledge to build companies, or online stores. That's sort of the main craze at the moment. Something very simple like online stores, incredible business. Affiliate marketing, where you're selling other people's products and taking a commission from that. YouTube channels, you make money from monetizing your YouTube channel when you hit certain criteria. There are so many different kinds of businesses that you can effectively establish to make money, and there is monetary consideration involved. We're talking about things like running ad campaigns with your savings, investing in good camera equipment if you're doing recording, or microphone equipment and that sort of stuff. There is always going to be an outlay, and yes, you might be taking money out of your savings, but in the long run, this is going to pay off for you, hopefully exponentially, if you keep going. I can't say that word properly. Exponentially, if you keep going, keep grinding. And the trick here is to effectively do multiple different things at once. So you might want to be investing in the stock market, you might want to dabble in a bit of real estate, or you might want to do something like I do, like start the YouTube channel. I'm not making any money off YouTube now, but the plan is to hopefully in the future make money off YouTube. And I also work my full-time job. I've got all these multiple streams of income coming in, but what I'm doing is not leaving money in my savings. I'm using all the money that I'm getting from my main income to fund my investments and keep things going. So that's what you need to do. Now, the last area that I highly encourage everyone to invest in, and in particular buy books, buy podcasts, buy whatever it is that you need, is education. Education is absolutely critical to your success. Knowledge is wealth in this scenario. The more you know, the more money you can make. If you understand how tax works, you can make more savings at tax time. Simple as that. In any sort of area, if you understand stock markets more, or different types of industries, you can take advantage of that knowledge that you've gained through putting your money into educating yourself, and then taking the information that you've learned and applying it and making more money as a result. So education is fundamental. When we start to combine all these different factors together, that is when you genuinely start building a good amount of income coming in and start actually building yourself a bit of wealth. So don't have your money sitting there in a savings account doing nothing. Make sure you're investing that money and make sure that it's working for you. That is my number one tip for everyone who is watching this video right now. And if you go, okay, I don't know what to do, just pick something and learn about it. That is the first step. The first step is actually giving it a crack in the first place. So with that, guys, I hope you did enjoy today's video and hope you got some value out of it. If you did, please remember to like the video and subscribe to keep up to date with all the latest content. And as I said before, leave down below in the comments section what type of investments you prefer to do and why you don't think you should save money and what to invest in. So with that, guys, I hope you have an awesome day. I'll see you next time. Cheers.